Good turnaround Tuesday, Warriors. How's everyone doing? Have another 24 hours to trade before all the fireworks. Don't try and make home run balls this week. Let the markets come to you after the noise. So we have the metals popping today. Dollar, I think the dollar is going to start pulling back. I'm long a little cable, rung a little bit under these lows. I think this would be the day where the dollar begins to start to pull back a bit. So we'll see what happens with the Fed. Let's start off with Ryan. So Ryan, I took a shot in the yen up here.
Yeah.
You know, thinking maybe we get a little, this was like an ABC and this is B, and maybe we pull back one more time. Just, you know, looking for, you know, at the max 60 to 80 pips in this kind of time period.
Yeah.
You know, no swing trading, just, you know, pretty much overnight or in and out the same day. You have a vibe on anything in here before, you know, the big Fed day tomorrow?
No, not really. We had just a little bit of a pop up. Looked to be led by some earnings results and a little bit of a shift up in yield. But we had that little move yesterday to the downside. Now we've had a little nudge up on the upside. But yeah, it's all, everyone's sitting on their hands, I think, for this one.
Yeah,
I'm
everyone
still
just,
my longs. Just
yeah.
see what happens.
I'm a little surprised with this silver rally here. So you know, we're still quite a ways from that recent high. Maybe this is going to be so I think the dollar may pop too. We'll see. This could end up being a decent short in the silver in the next couple of days, and gold as well. Silver is so much stronger. Here's your gold silver ratio hanging on.
I think you've got to look at the consumer confidence data for your input today.
Okay.
Big number coming out.
Okay.
If it's hot or soft, you know, the market's going to move on it ahead of the Fed.
Okay. And still confident in EG. I think it has to hold this 86 level. I was looking at it, you know, I still giving it the benefit of the doubt that this was real and this is just a correction. And it's probably, and it's back to this important support level here. I think it has to hold 580. But you know, we did confirm the high. So the implication of the confirmed high is it's not the high. So giving
it's
this,
bang in the middle.
Yeah,
it's bang in the middle of the two big figures, 85 and 87. I've got a level here, 86, 10, 86. It's held by a pip. Yeah, I'm still looking. It's possible the ECB could send it lower, and I'd still add back the cuts that I made to my longs off the 85, because if we couldn't break that 85 when, you know, everyone was most hawkish BOE, I can't see us breaking it now when we're potentially at the end of the hike cycle.
Well, you know, I know enough about Elliott just to be dangerous. And if this was the first wave out of the hole, and this is going to be a 2, you know, and it's really kind of chopping. This got from point A to point B in a hurry, a few days. And so, you know, that it makes it impulsive. I can't count the waves, but you would think if we held this 86 to 85, there's this was 200 pips. So if we had 1.618 from here, about 300 pips, gets you up towards 88, 89, 89.
I'll take that.
Yeah. So
I'll take that all day long.
Yeah. So on the daily, it still looks okay. I think today's important. It's a turnaround Tuesday. In fact, I'm going to buy it with 50 pip stop right here. Okay. And see what happens. And I'll get out probably before the Fed with most of my stuff. Kman, how are you this morning?
Good morning, Dale. Good morning, everybody. Yeah, I'm doing fine.
Look
I'm
good.
also watching that 85.80. I know there's a 50% at 86, but I'm also keeping an eye on that 85.80.
Yeah.
I'm a bit in between seats for what sterling is concerned, because next week we will have the
Oh,
Bank of England.
that
I
makes my
actually love them
that
to go
makes my
50.
butt hurt.
Come again?
Being in between seats
Yeah.
makes my butt hurt.
Oh, yeah, exactly.
You know, there's that crack there, and you're sitting
Yeah,
on the metal.
Mm.
I don't like sitting like that.
Yeah. I think there's yeah, this little chance that Bank of England may do 50 and send euro sterling lower, also because the European data are slipping and sliding. You know, we had
PMIs.
wet PMI. Then this morning we had a pretty strange ECB report. We had the German IFO, which came in weaker. It's not looking too rosy right now. So there is a chance for me that euro sterling does another dip, but that I would view as an opportunity, I think, to get long. But I'm trying to be patient on that one. And then, yeah, as you were saying for the yen, I think 142 is your first real marker on the top side. That is, if you want to counter trade, and then from now until the Bank of Japan, there's going to be a lot of noise, right? You have the FOMC, you have the ECB, you have the Q2 US GDP, and all of that is still to happen before the Bank of Japan, which then is a bit of a flip the coin, really, in between what can mean what for the yen, unless they really go and start normalizing policy at this meeting, which doesn't look like it, because Ueda said they wouldn't. So unless they will spring a big surprise, but yeah, I do trade it, but not for no more than an hour or two on this yen right now, and just wait what's to happen. And then I think your silver, to come back on that one, I think it's China. That's China. They are trying to tell the world to that they are going to put in more and more stimulus to start their economy again, and at the same time, they're sending out the submarines, selling dollar China. So we are actually trading just under the PBOC fixing right now. And I think they are trying to tell investors, come on, buy me, because we are going to do what it takes to get the economy going again. But
this would be an interesting level down here, wouldn't it?
Very, very, very much so. There's a few levels before, you know, right where we are now, roughly.
Yeah.
Then another few around 70608. But yeah, 7 is going to be a big psychological level. That's still nearly 2% away from here, right?
Yeah, about a dollar weakness could take it there, right?
Dollar weakness could. Dollar weakness could. That's why I'm saying on the Flow Show, this week is going to be important for the CNH, in my opinion, because you have a few things at play. You have not only the other central banks, the Fed and the ECB, but you also have what the Chinese are trying to tell the market, that worst is over, that they are going to do something about it, and now remains to be seen. And I guess we'll have to wait for maybe Thursday or so, whether the market is really going to buy it. And if the market is going to buy it, then if it breaks back below 7, then I think you're going to do another 3, 4, 5% perhaps.
And hey, Kman, good morning, everybody. They have their is that Poliberto? I keep mispronouncing.
Euro.
Is it all week this week?
I think it's a few days, but I don't know exactly. Used to be 3 or 4 days, but I don't know whether it's really that long right now. But it's 2 days in a row. They came out with some comments. Yeah, they really want to turn the investors around, right? Because the investors weren't buying the Chinese revival. But now they are trying to force the issue, and they are trying to force it as well by sending out the Chinese banks selling dollar China as well. So trying to force the hand there.
I mean, they're trying to do everything, and that because I mean, it's it's really obvious that China's reopening has been not what the market is expected.
Well, you know, Baba's kind of a bellwether, guys, and you know, it's held up better than a lot of Chinese stocks, but it had a real nice day yesterday. If you didn't know it was Alibaba, what would you think of a chart like this? That's coming out of maybe a handle here, cup and handle, something like that. This is a handle here.
Coach, we'll take a look at the Chinese markets. They are trying to break out to the upside.
They're trying, aren't they?
They are, as of this morning or last night. Yeah,
it was yesterday, this action in Baba. So right there on the precipice. So maybe China's gonna, you know, keep the party going for them, or at least start a party.
It's going to be one that is going to benefit, of course, if China reopens, because then the investors are going to jump on whatever is Chinese, and Alibaba is probably one of the first ones that the market is going to jump on. Now, again, are we buying it today because we see the markets go up? I don't know. It's probably, to me at least, I want to see a confirmation that they really are doing something, because the details of what they will do are still very unclear.
Opaque. Everything's opaque. Just a quick update on the grain, since I'm here on the page. Wheat was limit up yesterday. I haven't seen that for a long time, and you even had corn coming out of the hole. So it wasn't the end of the grain deal that was damaging grain facilities in Ukraine, which, you know, is going to make it more difficult for them to even have storage to ship. So, and you know, this was not weather yet. Weather in, I think it was the goddess of grain, Angie, says that the crop in beans is made in August. So if you're really going to have a weather market, it's next month in the soybeans. So just, you know, an asset class I'm keeping an eye on. And you know why? Because the Fed can't print corn. Okay. And you know what? You can't eat gold. It's one of the most emotional commodity markets out there. Because, you know, if Russia's successful and we drive grain prices through the roof with low carryover in a bad weather year because of El Nino, there's going to be a lot of suffering, mainly in poorer countries that are just subsisting now. So anyway, well, we've had a plague, we have a war. Why not throw a little famine on top of it?
Oh boy, here we go, Dale.
Have I cheered you?
Right.
Give me a why.
Gosh dang it! I have to get the tinfoil hat once again.
Give me a why if I cheered you up today.
I mean, seriously, maybe I should take over from here. I'm gonna go ahead.
Should I go get stabilized?
Let's go. Let's talk a little earnings this morning. If you guys want to see where all the earnings are at, one of the, you know, they're one of the best places. You just go to, you know, ForexAnalytix, just look at the live squawk feed here. You can see all the earnings that we've had. Some pretty key earnings this morning. And good morning, team. Look at GE and look at how it's trading this morning. You know, it's trading up at channel resistance, like 115.
All the way up there. Wow.
Yeah, we got Verizon looking pretty good. Let me take a look at Verizon here.
When's Microsoft released, since you're now a stock jock too? Do you know when their earnings are coming out?
Microsoft comes out today after the close.
Oh, that's going to be real big.
Isn't it today? I want to say it's today. Hold on, let me just confirm that. Yeah, today, and then you got Apple or Alphabet, Google, excuse me.
Okay.
Yeah, so
you know, they're for now, if the S&Ps make a new high, Blake, and I don't think they're that far away, what, 5 handles or so, it'll be the first time in my recent memory, which isn't the best, that the S&P has made a new high without the Qs. That's different.
Well, you know, that's rotation, right? You know, it's
but you know, so people are saying it's rotation, but why didn't they say that, you know, on the way up, what led?
Because what led was the magnificent 7 or grade 8 or whoever the hell it was.
So why can't they lead the other way if they're leaders?
Because people take profits and move it into the rest of the market.
Okay,
right?
So I just, I've just seen that rotation isn't necessarily bullish.
Well,
yeah, we'll see.
I think what has to happen, and we, for those of us that have lived through a lot of bear markets over the years, bear markets take down everything. It's not, that's the thing about rotation. If you see, money come into the dollar, into gold, into bonds, and out of, stocks, then that's a bear market, or that is like serious selling. But right now,
it's
it's
never
just
a bear
rotation.
market at the top.
What's that?
It's never a bear market at the top, and it's never a bull market at the bottom.
Yeah,
so,
right. You're right. I mean, yeah. So I mean, we're just, you're getting profit taking from some of the leadership that we've seen for the last year and a half, moving into names like like banks, General Motors, or GE, excuse me, Verizon. Why not be in a larger cap stock that pays a dividend? It's
how about oils, Blake? WTI broke out.
Yeah, it's a big breakout above the 200-day moving average.
Do you believe this trade?
Well, I believe it's gonna make central banks jobs more difficult.
Yeah. So between food and energy, so much for winning the inflation battle.
Yeah, I mean, we had a bullish wedge, and it broke higher. I mean, it's gonna be tough. I mean, everybody thinks that, this is gonna be a really interesting week, just especially when you are talking about the Fed. Hey, Ryan, you had your trade-off show today, right?
Yeah, we can't print energy too, Rohit.
Yeah, I wanted to ask, and you just wrote a blog. And by the way, if you guys want to get Ryan's blog, you go over here to where it says blog on the ForexAnalytix site. Did you have to put Christine Lagarde right in the middle? I mean, honestly, Ryan.
Yeah, well, it's either that or now.
I mean, Ueda isn't much better either, but actually, I don't even know why we use this picture, but this is a really good blog that Ryan put together about different situations or different outcomes with central banks this week. Ryan, what are your thoughts here? With inflation, I mean, and you got like the Fed, that really, I think most economists and most banks are looking for significant cuts going into 2024. How do central banks adjust thinking of the markets, anticipating this type of move in 2024 if inflation is sticky and growth is relatively slow? What are your thoughts here?
Well, it's a bit like I said on the Flow show. That they can be wrong on this side of the trade. They can say they're going to hike 5 more times if that's what they want to do, and it doesn't matter if they're wrong, because if they're wrong, it means inflation has done what they want it to. So it's different to being wrong when they would tell us inflation was transitory and they weren't prepared for it and they got caught with their pants down. So they can be wrong on this side. So it doesn't matter. So they don't, as I've been saying it for a while, they don't want to let the market get too dovish. So they will do, to coin a phrase, whatever it takes, say whatever they need to say to keep the market from getting too dovish, even if that outcome isn't really going to happen. So, I think it's a limited trade. If you get a hawkish Fed, if you get a hawkish ECB, and it all sounds bullish and hawkish, I don't think their currency's rising is going to last long, because the market is going to say, okay, that's fine, but you're still at the end of your hike cycle, and that's all we care about. So that's how they change the market's view of that. They've got to keep stamping the message down. Rates may pause, but they're not going down anytime soon.
If you look at, just take a look at the 3 different central banks that you're highlighting, and look at their their associated markets. Like, here's the S&P right up against highs for the year. If you look at the Nikkei is also not too far off of its highs, consolidating in a nice triangle, right? And then you got the German DAX. We'll just use that, for the ECB. You got the German DAX, just not far off of its all-time highs. I mean, how do you stop this? How do you stop this train in equities? Because financial conditions continue to loosen up, as these central banks tighten policy, and it's not exactly what they want to see. It's not going to make their jobs easier.
According to the latest ECB survey, which showed that firms' lending fell to the lowest on survey this morning. So they've got tighter financial conditions in the Eurozone. But you look at your three stock markets, which, based on the fundamentals sitting here right now, which one would you sell if it was purely down to fundamentals?
If it was US, it was down to
or Germany?
DAX, German DAX.
Yeah.
Hands down. Yeah.
Yeah.
I mean, but let's not, ignore price action here. The German DAX did hit all-time highs literally just, in June. So, I mean, those are all-time highs. So, it's hard. It's
a give, hasn't it? You can't have German data coming out the way it has been recently and seeing its stock market all-time highs. That it doesn't make sense. At some point, you perhaps got to say, well, I've had enough of seeing crap data in a high stock market. I'm going to go the other way. And if the market takes that view,
right,
that's when you start to see a big pullback.
Well, let's shift gears a little bit and let's talk to Stelios and see how Stelios is doing on the beach, reporting from poolside. Good morning, Stelios. How are you?
All I know is I joined a few minutes late and I heard Dale saying that his butt hurt. So I don't know what preceded that, but good luck with that.
Came around and Dale's butt hurt. Just kidding.
Well, poor Kman sitting in between seats.
That's right. You guys are sitting in. Dale was talking about sitting in between seats and his butt cheeks hurting, and I don't know how that conversation came about.
And Kman is. I was feeling for him.
So, Stelios, what are you observing? What I know you were probably on the Flow Show today. Remember, there's a lot of people that are listening in, guys, that. I know you guys always say, well, I just said on the Flow Show, there's a lot of North Americans that are listening into this show that weren't around this morning for your show because we were actually sleeping. So what caught your eye today in European hours?
Well, there's not that much happening today, but what I did say on the Flow Show is that I think central banks are now having more and more excuses to turn dovish. And I think Timmy Leaks was talking about this, was it yesterday? I can't remember, that the Fed is a lot closer to saying, our job is done because inflation is dropping, because price pressures are abating, PPI is going to go negative year on year, etc. So I think that at 25 is done simply because the market's pricing it. If I said on the Flow Show this morning, if I was Jay Powell, first of all, I would have started hiking a lot earlier, but I would have stopped now. I wouldn't hike tomorrow because I think that the job is done, because I think that inflation is dropping, and what they're doing is they're putting the brakes on the economy, and we're seeing this in pretty much all metrics except employment. And we've talked about why employment is still looking strong, but it's not really. Underneath, the details are not strong at all. So you're seeing PMIs turning, you're seeing pretty much all the leading indicators looking weak. And as we move forward in time, the effects of this tightening will take more and more effect. So, and yes, core CPI is higher than headline CPI, but that's dropping too, and that will continue to drop. So I personally think they shouldn't hike, but they will, because they don't want to surprise the markets. But then the question is, what do they say? And I think that now they have a lot more ammunition and a lot more reason to be more dovish than expected. So that's why I think yields, the dollar, they're going to be moving lower. Of course, there could be a surprise. I mean, obviously, if I knew, I wouldn't be sitting here. I'd be on a beach every day of the week. But I think that's the most likely scenario now, that the surprise is on the dovish side. I can still do that. Yeah.
You might have to live in a tent. But you can do it.
I'm gonna come back to that topic here in a second. I just actually I'm gonna ask all of you guys what you think the Fed is going to do in 2024. So it's just stand by. I'm gonna and Steve, I hope you're here because I'm gonna ask you that question as well. I just want to go back. Okay, good. Don't go anywhere, Steve. So
I'm not going anywhere.
To take a look really quick because we were talking about it earlier. These are the Chinese markets, right? Here's China 50, and it's breaking higher out of a little triangle, right? It's actually not negligible. I mean, we're at the 200-day moving average, but we're trying to press higher. Here's the Hang Seng, right at triangle resistance. And you guys were talking about the US dollar CNH, and the thing about the US dollar CNH, it is back below the 50 DMA, and it's under a little bit of pressure, trying to make lower highs. Now, one thing that everybody should be paying attention to, and this is one of the things that correspond to a stronger stock market, is you tend to see the CNH a little stronger. What would happen? And I want to ask, I know Ryan, you trade the CNH quite a bit. What would happen if you started to see us back above 730 in the US dollar CNH, like breaking out and seeing highs that we haven't seen this year? What would that suggest to you?
That would suggest either we've seen something going on in the US that's bullish for the buck, or that China have gone into heavy stimulus, which they're not looking at doing even for all these measures. But also, when you're looking at the stock market, be careful, because they, just as they can come in and step in to $1 and get the banks to do that, they can also get them stepping into stock markets and get them buying stocks.
But this is one of the levers that they pull, right? If I'm China and I'm like, look, we're not selling as many goods to Europe, to Great Britain, to the US as we need to, I'm going to weaken my currency and I'm going to make it cheaper for these guys to import my crap. I mean, that's a lever that I'm going to push and I'm going to pull if I'm China, right?
Yeah, they're not aiming for that. They're aiming for a pickup in domestic demand. All these measures are aimed at their own market, not export markets.
Yeah, but when that doesn't work, where are they going to go? Right? I mean, because they're trying their domestic market, and they're trying to get Chinese people to buy and to pick up for the lack of demand from the ROI, right? Or ROW for the rest of the world. But we're seeing it in numbers from the Richemont Group, probably from Louis Vuitton this week. We're going to see demand just continue to pare back. So how do you what lever do you pull next? I think it's with the CNH. So I don't know. That's just my thoughts. You have any thoughts there?
Yeah, but then that's why they're looking at other markets. I mean, no one talks about them in Asia. No one talks about them in South America. No one talks about China in Africa. Okay, the level of wealth may not be in those countries, but
they could sell a lot of Louis Vuitton bags to Somalia. I'm joking.
They sell a lot of snide Louis Vuitton bags to Somalia.
Yeah, so I don't know. It's one of the things I think I just wanted to just reference regarding the CNH. When typically if you start to see this move higher and break out to the upside, I think that's one of those. You have to be aware of what China's doing at that point, since they are managing this flow. But you can see, just like what Kman said earlier, I mean, they're trying to do everything they can to get to ramp up domestic demand with all their measures of stimulus. Trying to get moving the CNH, so should be worth noting. I mean, Ryan, are you trading this right now?
No, I'm not in it. I did say last week, I had been feeling for a while that the table had turned. Instead of being bullish, it's now bearish. I didn't quite get a move up to the highs again, 725s. I was looking at to get on some shorts, but I think we're now in rally sell mode. When the officials step out and say enough's enough, you don't want to be fighting that.
Okay, I got a question for the whole team here. So let's say in a perfect world, right? We get past 2023, and inflation is so close to 2%, but still running above the Fed's 2% threshold for CPI on every measure. Yet growth is slowing dramatically. We are in a recession, and let's say that this is the situation we're in 2024. Do you see the Fed actually cutting rates while inflationary pressures are above 2%? Let's start with you, Steve. What do you think?
I'm afraid they will.
They will cut rates.
Yes, but to be absolutely frank, it's not something we have experience from, right? We know that central banks, as years pass, make bigger and bigger mistakes and have completely moved away from the status quo of how to do, of what was the best practices to conduct monetary policy, right? So far, they're trying to prove that, they've, let's say, changed in the sense that they do realize the huge importance of not making another mistake. They already did the mistake of underestimating inflationary pressures and the possibility for inflation to move higher. And they've tried to convince us that they're not going to also do the mistake of not handling things properly. But, we can't be 100% sure until we actually see them make a decision, because it will have to be a conscious decision, right? It will have to be a conscious decision. What am I willing to sacrifice?
Right. Okay. All right. Well, what do you think, Stelios? Do you think that the Fed would cut rates if they needed to, with inflation still above 2% going into next year? Let's say, we're into 2024. We're in a recession. Do you think the Fed acts?
Well, from the experience that I have over the last 25 years of trading, the central banks always tend to err on the side of caution when it comes to monetary policy. So unfortunately, I think the answer is yes, and I will agree with Steve.
Okay. What do you think, Ryan?
Yeah, they're going to cut rates any which way because they want to get them down to a neutral level. So whether it's the economy tanking or whether it's the economy not tanking, they still want to get rates down.
Yep.
The market problem is how fast they get them down, and that's what we're going to be trading into the latter part of this year.
All right. Kman, do you have any opinion on this?
What was the question? No. Yeah, I'm joking. No, of course they will cut it, a slowing economy, but a slowing economy will de facto bring higher unemployment, and that's their second mandate, is to look at the employment. So if the unemployment goes up, they will cut. Yeah.
Okay.
Yeah.
All right. Well, fair enough. Fair enough. I think.
Ask me the question when it will be time to look past inflation, because I am starting to look past inflation. I think the debate is starting to get old, because as well, Fed as ECB is looking at inflation, and if both come off even in different speeds, it's not going to have too much of an impact on the euro dollar, I would say. But then you have to look at other currencies.
Yeah, well, yeah, and I think you're very succinct, and our focus is probably gonna have to shift over to labor markets moving forward. But here we go. We may end up having like a weaker labor market and still persistent inflation, which is going to be another more talk for a later day. And Dale, I wanted to ask you, but I'm working into Ben's time, and I'm sure Ben's here. That might be a great question to bring Ben in on. And you guys might have a little conversation there. So I'm gonna pass it over to you. So it was nice to have Ben. Ben, by the way, Ben, if you are here, hope you got my hat tip from the week ahead video. I said you picked up on the equal leg move and the dollar index, and I didn't see that one. So well done.
Hey, Blake, I did see that. Thank you. It was, I saw that, and I said, hey, man, those things are significant.
They
especially when you get a reaction, and we got a reaction off it, so you can't dismiss it.
Yeah, I was looking at this. I was looking at the other ABCD equal leg move over here in the euro, and I wasn't even looking over here. So really great eye, and it's nice to have you here, Dale. I'm gonna I'm going to hand you off to,
I
and
left.
I'm going to hand you off to Dale, but
I
there
left.
or, hell, Ben, you just take it. You got it.
Yeah, go ahead, Ben. Just go ahead, do with your PowerPoint.
Yeah, you got it. No, I just want to say, hey, welcome, Dale. I meant to get to you. I just looked up at the clock and I realized I just was out of time. So I want to thank everybody for being. I want to thank the whole team for being here, and you guys have a great interview.
Yeah. So Ben, what I think the Fed is going to transition to, and I know we're going to talk about it, is they'll admit there's some progress with inflation. Okay, you're going to probably share the screen, but now they're going to start making growth the enemy, that we have too much growth still, and they have to remain restrictive. So that's really, going to be a tough argument for them to, say, yes, inflation's a little tamer, but there's still too much growth, meaning they don't like less inflationary growth.
Right? Yeah, I mean, listen, you guys had a great discussion today, and I love it when it kind of dovetails with some of the topics I have, and I'm going to touch on a lot of these things. Are you going to
share? Do you have?
Yeah, someone has to stop sharing. There we go.
I did it.
Now I can share. Yeah, I'll share the presentation, and we'll dive into it.
All right, you said something about that you and I don't need to take mushrooms like Yellen to do this trip.
Yeah, because we're going to take a trip back and forth in time.
Does Yellen go to San Francisco and do magic mushrooms?
No, what happened? I don't know if you read the story. She was in China, and they gave her mushrooms for a dinner, and they said they were some of them were psychedelics or something like that. I remember reading that headline. That's what the joke was referencing.
Oh, wow.
So Yellen,
that actually happened?
Yeah, it did. Go look. Just do a search for the story. Mushrooms in China, Yellen, and you'll see.
I have an important question. Can somebody tell the difference between under the influence Yellen and a normal one?
Steve, yeah, she may actually make better decisions on shrooms. So
yeah, she had some.
I honestly believe that to be the case. I think you're right.
Yeah, she was smiling and showed pictures of her. She was bowing and smiling. I think she had a good trip.
I think she had a good trip.
A good trip on her trip to China.
A good trip, pun intended.
Exactly.
All right, buddy, go ahead.
So we're gonna do a couple things, and just to sort of give you a background of my framework, I kind of start with big cycles, and then the cycles are sort of wheels within wheels, where you got larger cycles, smaller cycles, and then we come down. So I start with a cycle framework to understand, what's the background weather, what things are favored, what things are not favored to happen, and use that as the initial filter. Then we look at fundamentals and technicals, and sort of putting it all together. Then we come up with an investment thesis and how I'm going to position my money. And again, if I have problems with my returns, I got to look in the mirror, because it's all on me. So today we'll talk about a couple major cycles, and then we're going to focus in on the inflation cycle. And you guys had a great discussion this morning about inflation and what's happening, and how are the policymakers going to react and everything. And I'll get into that. And if you remember last time, Dale, we focused on the war cycle, and that ties into inflation as well. So we'll reference that a little bit later as well. So we start with an epic cycle. We are coming to the end of a 400-year cycle that has been governing sort of humanity and how humanity organized societies and the structures that sort of support society and support humanity. That is changing in the next 3-4 years, where the old cycle is ending and a new cycle is beginning. I highlighted key things that I want people to understand. We're ending the era of mega structures. So the big government, centralized power, all sorts of things that you're seeing in the death throes, which are grasping for more, right? They sense that they're losing power, they're losing support, and so they're trying to centralize and make power even more restricted to a few and not many.
So they're fighting the cycle with CBDCs.
It's completely predictable, right? Because at the end, what's going out and has been in power is going to fight and struggle to maintain it. And right now they're trying to increase it, as we've seen with, the censorship issues and surveillance.
So does the cycle say that they won't be successful in this environment?
They're going to fail.
Really?
They're going to fail because
best news I've heard in a long time.
And the key thing, Dale, is because the background frequency is not going to be supportive of it. Yeah. So it has been supportive of it for 400 years, which is why we have these institutions. One of the key things too is another feature of the end of this cycle is poor leadership is causing more problems, right? It's amplifying the fear, it's amplifying the insecurity people feel, and it's helping to lead to sort of the loss of faith and confidence in these very institutions. This is a list that I've, been sort of curating as we go along and events unfold, and I generally highlight new ones, every talk, and I've put on this one, I think, really important ones. I think the destruction of the Republican and the Democrat parties is in full swing, and evidence of that is a record number of Americans say they are now independent voters. It's up to 49%, and that is a record. And I think it's going to continue because, again, these are older institutions, ways that we organized our politics that have lasted for years, and you can see them trying to grab for more power, trying to prevent candidates from running, trying to prevent third-party candidates from participating in major national elections. I think this is a perfect iteration of what happens when the epic cycle comes through.
Was there anything in the epic cycle, if you go way back, where you've had a situation where you had the same two candidates, two presidential elections in a row?
I think there were. I don't know offhand, but I seem to remember there was a rematch.
It looks like it's going to be that way.
I don't know what's going to happen next year at the election, but I do know cycle-wise, the second half of next year is when I believe the shit really hits the fan. So I can't say what's going to happen. I don't know if it's going to be a suspension of the election or some major problems with the election, but I would think that's going to be a focal point for sure.
How about the introduction of AI into the last 3 years of the cycle?
Yeah, that's kind of interesting, isn't it? Because to me, it feels like it's a natural progression in that the people in power can certainly want to use, they certainly could want to use AI, but it also makes the individual pretty damn powerful, having that at your hands, if we have it at our hands, right? And that gets to our next point, which is this sort of erosion of faith and belief in big tech because of the things that they're doing with the data that they have, the censorship that is now coming out that they've been a party to, sort of partnering with governments to censor people who have a different viewpoint. It's really surprising to me because, the last 20 years and everything, as you mentioned with AI, tech is so important. But I certainly sense that there is a suspicion and a distrust of big tech that is growing and wasn't present 10 years ago. So I wouldn't be surprised to see sort of ramifications with big tech. How it's going to play out, I have no idea, but it's definitely on my radar as part of this epic cycle.
So maybe they break up the companies because they're too big, or
could be, again, and that would fit with the smaller. Remember, the world's not ending in 4 years. Just the world as we know it is ending. There's something new coming, and one of the hallmarks of that is smaller, more self-governing tribes and communities as opposed to a large centralized system. So maybe we do get a breakup in tech and more, smaller type iterations instead of the behemoths that we have.
Okay.
This is the part where we're tripping for sure, because we're heading back into the 70s, and the cycles that we're experiencing today are directly connected in my work to what happened in the 70s. From a presidential standpoint, we had Nixon in the 70s, we have Trump, and you can see in the list that we've gone over many times the similarities in terms of events. And remember, nothing is exactly the same, but it rhymes, it has the same rhythm. It's there. And we went from Nixon to Carter, and now Trump to Biden.
Okay, I have a market question based on that last slide. You have the Nifty 50 up there.
Yep.
And recently we've had, use a basketball term, the Elite Eight that have led it, and they've been weaker. And people are just saying it's rotation, and they're moving out of those and into the broader market. What happened after the Nifty 50 peaked? Did rotation save the market?
No, it was bloodbath.
So it was rotation bullish?
No.
Okay, so because that's that's a narrative that's floating around, is tech let it up, but tech won't hurt it if it heads lower, because the rally has broadened out. So
while that
go ahead.
I was gonna say, while that's possible, it sounds like a hopeful bull talk.
Yeah. So the other things may not fall as hard as tech, because maybe they're the next cycle. Anyway, go ahead.
Yeah, we'll see. So, and here we are today with the parallels between Jimmy Carter and Joe Biden. The ones that I've highlighted, I think, are really important, because I believe this is the phase that we're moving into. In the 70s, which we're going to go over in a minute, we had 3 waves of inflation, each with a higher high and a higher low. Is that going to happen again? No guarantees, but certainly the background weather is there for it to happen. We had a commodity boom in the 70s. We had the first leg up in commodities, then a sharp correction over the past year. I think the next leg up in commodities has started and is starting, and that's obviously going to have ramifications on inflation and economic activity. And then, as you guys were discussing, the Fed policy mistake. I believe we're going to see more policy mistakes. And I'll ask you a question, Dale, because I think this is important. Let's say we do get a Fed policy mistake. What direction do you think is likely for that mistake to be?
Well,
like too tight, too loose?
Well, now it's too tight, and
Dale, by the way, you sound far away, just letting you know.
I'm so far away.
That's much better.
Yeah, okay. So I think they're making a mistake, and maybe it's by design. If you really want to know what I think the Fed wants to generate a banking crisis to have a reason for people to accept CBDCs, because there's really the only selling point for them is convenience, and you don't use paper anyway, and people don't like change unless there's some fear that motivates them to change. And
Sure.
People are already worried about banks, and if it gets worse and we have a banking crisis, be perfect rationale for converting to CBDCs, and that it's a takeover of the banking system by the Fed, in my view.
Interesting. The thing that I was thinking about the other day is Jerome Powell, right? He's a PE guy, worth more than 100 million, something like that. That's been reported. What's in his mind right now? Like, why did he take this job? To me, somebody takes that kind of job and takes on that pressure because it's all about legacy, right? That's what he's playing the game for now. It's not for money, maybe for power, but it's about his legacy. Like, how's he going to be remembered? And the stuff I've read on Powell is Powell wants to be a Volcker.
Right.
He doesn't want to be a Burns.
Right.
And so if that's true, right? If that read is true, and again, I have no way of knowing. I don't drink beer with
He'll stay
Powell.
tight too long.
The mistake is most likely going to be on the tight side.
Yeah.
I mean, that's where my thesis is. I obviously
Already
could be
is.
wrong.
Already
So
is.
let's see what happens, and let's see how the mistakes that are made. So let's get into inflation, because this to me is the key to the markets right now. If you get inflation right, you'll be positioned properly. If you get it wrong, you're going to be wrecked. So getting inflation right is key. As I mentioned, the current time period, we're connected to the 1970s. In the 1970s, we had 3 waves of pulsing inflation. And we're going to go over the numbers so you can see it both in charts and in graphs. And the other thing that people aren't taking into account, because they probably don't study cycles or it's not a part of their repertoire, is this current period for the next 3 to 5 years. The cycles are supportive of shortages and limitations. Simple supply and demand, simple economics. When you don't have enough of something, prices go up, right? That's going to mean that the mistakes are going to be on the upside for inflation, not on the downside.
Magnified.
And the big one that Blake mentioned is absolutely spot on. You must be focused. Commodities are one thing, and we're going to go over that. Commodities are in tight supply. There's been an underinvestment in terms of capital into new supply, and it's going to have ramifications in terms of the supply-demand balance. But in labor, and not a lot of people are talking about this, Blake mentioned it, we are in a position to have a wage price spiral again. And I'm going to give you about 5 examples of recent contracts that were signed by unions with major companies and city workers that are, they're baking into the cake that we are going to have inflation. The other one that's on everyone's mind, but not so much anymore because it's sort of died down a little bit, but this reverse globalization, it's real. And I'm going to show you some figures about manufacturing in the US, about new plants being built, massive plants that are being built, where goods are going to be produced here, which is great because it'll be dependable supply, but it's also going to be higher cost labor. Therefore, the products are going to cost more. And of course, in every crisis, there's an opportunity. So we're going to look at the opportunities and what we can do. This is, I think, important to look at because it shows month to month CPI from 1970 to 1980. And I highlighted the peaks and the troughs, right? So if you look where we are currently, we're probably right in here. It's early 72. Inflation's coming down. It's been coming down for a while, and we're heading out to this level where it's going to bottom out and start moving up again. And if you notice, we peaked in January of 1970 at 6.2. We came down to 2.7 in June of 72. The next peak was 12%. And the final peak in 80 was almost 15%. So once inflation gets going in the economy, it's really hard to wring it out. And there's a lot of spiking of the ball right now, mission accomplished talk that inflation is dead, it was defeated, and how great they were. And see, it was transitory. If you're talking about Paul Krugman, it's not. And the echoes of it are there, and it's baked into the cake. And I'm going to show you how with labor. Here's a graphical representation of annual inflation rates, again, showing you the peaks, right? Higher highs and higher lows. There it is in chart format. What kind of pattern is that, Dale? 3 drives.
I don't see, we need one more low.
Yeah.
Oh, you mean at the top?
At the top, yeah, at the top in the 70s.
Yeah.
Nice 3 drives.
Yeah. Some guy talks about that. That's all he knows.
And then here's my homage to Dale. 3 drives from the Fed coming. There it is in the 70s.
Yeah.
So is it going to repeat exactly? No. Is there a decent chance it's going to rhyme? Yes. The other thing, we talked about this at the last one about war. War has a dramatic impact on inflation. Just look at this chart.
Yeah.
So if we are in a period of war, and whether we want to admit it or not, we are in a war because we are funding a war, that's going to fuel inflation.
Okay.
Let's talk about shortages. This is the one I think that is most important to focus on right now, which is the labor shortage. There is a shortage of labor, and it's not going anywhere. And when simple economics, when you have not enough of something, the price of it must go up. So is that happening? Well, we have had 8 consecutive quarters of union wages that are accelerating. Right now, contracts are being ratified where wages are on average going up 7 to 8% on average. Here's 4 examples for you.
The question, Ben, is what do you think inflation is at the moment? I mean, really, because we know the nominal increase in wages, right? Because it's nominal. The question is, how much is inflation at the moment? Really?
Way higher than being reported, that's for sure.
Yeah.
And they make adjustments all the time to try and keep the number lower. What I think is happening, Steve, is that if you look at these 4 examples, you got very different companies, very different industries, right? City of San Diego, New York Times, United Airlines, and Disney. The wages are going up. Yes, it's in nominal terms. The point that I'm seeing here is not whether they're getting like a real increase or if they're better off, but it's the companies are going to have to make a choice. Do we pass on those costs of higher wages in terms of higher prices, or do we eat it and have our margins go down dramatically?
Even if they eat it, we all very well know that they can't do that forever. They can do it for a very limited period of time. So eventually it all comes back to the price.
It's going to come into the prices that you and I are paying for these goods and services. And I think this is a point that is not being talked about by a lot of people, and it's not being factored in, is that these
people aren't going now. The part they're having, they're not getting a lot of crowds at Disney World,
right?
Florida now, and the consumer's supposed to still have excess savings. So I don't know how they're going to be able to raise prices if the economy weakens.
And I mean, look at these things. You're talking about 7 to 10 to 12% raises on an annualized basis.
Yeah.
It's gonna have an effect. What's that effect going to be? Actually, and absolutely, I don't know. But you know, the odds are it's going to end up in higher prices for the products we pay. Commodities. Let's talk about commodities, because there's been a lot of talk about, because we're going into a recession, the demand for commodities is going to collapse, so commodities are not an issue. I think right now tight supplies is a bigger factor than demand destruction, especially in certain markets where the supply demand is out of whack. In the physical market, oil is an example, copper is an example, and silver is an example. And I heard you guys talking about silver and it's saying how it was stronger than gold. I think it's related to the fact that all this green stuff that people are using requires a lot of silver. And let's look at some of the deficits that we're seeing. Oil markets. This big spike is your COVID, but they've been in consistent deficits, basically, with a few times when we went into surplus. And there's not a lot of CapEx going on here. Not a lot of supplies coming on the market. So if demand stays where it is or increases and we've got less supply, you're going to have higher prices. And, you know, oil is the engine of sort of commodity inflation. Metals. Copper is a market that is in serious structural deficit. And I think, again, the economic worries about copper, oh, we're going into recession, things are slowing down. What about China? If you look at copper, technically, it's been triangulating for a while. It's not really going down. When and if we have these supply issues and demand doesn't collapse, that's when you get a big move in something like copper. This is one I wanted to show, again, going back to the war theme. Every time there's a major war, commodities spike. Question is, are we going to have a major war here? Hopefully not, but it's certainly, the ingredients are there for that kind of stew. Let's talk about the reverse globalization. We are having what I call a reshoring boom. Just in the first quarter alone, these are 5 major manufacturing plant construction projects that occurred. The only thing I will point out, they're related. 2 out of the 5 are related to the green technology and batteries and sort of the clean energy, and that leaks back into helping copper and silver. So that's supportive of those themes. And the other is the semiconductors, right? And that's sort of a strategic thing. We need those supplies secured, and we need them secured here in this country. The bottom line is
we may need secured supplies, but there's a glut of semiconductors on the market right now.
There is, and that doesn't belie the fact that the semiconductors manufactured here are going to cost more.
Okay.
The batteries manufactured here are going to cost more. It's because the labor costs are just not going to be as cheap as they are. And
so why are people going to buy what's manufactured here if they could get it cheaper from China? If we're not in an all-out trade war about that?
Well, that's
or
the
from
point.
Taiwan.
You said it. The big question is if you can get it from China. You may not be allowed to, right? Because they may not allow them to sell them.
Well, we're the ones that are doing that.
Absolutely.
Chip technology.
Right.
Okay.
Let's go to the next one.
Glut.
So let's talk about the opportunities. Here are the things that I'm looking at. Number one, I'm looking to sell risk tactically. I don't think you can just close your eyes and go short, because you have to be a trader. And I don't see their cycle wise a major panic until the second half of next year.
Well, that's different than previous presentations, right?
Yep, absolutely. It's going to be, sort of tactical shorts where, you take a 3 to 5% drawdown on it, or a 5% move, an 8% move, but not the big 20, 30% moves. I think.
Why did you move your time frame?
Based on the cycles. I did some more work on them, looked at what was actually happening today, and then matched it up to where it fit with a period where we're not going to see the panic until the second half, which also fits with the real estate cycle. Because the thing that was bothering me is I didn't see the big collapse in real estate until late 24, early 25. And I'm like, how is the market going to tank if real estate's still holding up? It just didn't fit economically. And so this is a better fit. So I'll show you a couple charts on selling risk, couple epic cycle plays. We'll look at buying commodities with a focus on energy, agricultural, and the metals. I think you got to long the US dollar, and I think you got to sell bonds. And we'll get into them real quick. Before we jump into those, let's look at positioning. Look at where commodities are now in terms of the weighting and positioning. Not real popular at this point. Certainly were popular last April, right near the high. So anyway, that's good news for commodities. How about the dollar? Can't find many people bullish on the dollar right now.
No, you can't.
It's also good for a long dollar. So let's see. ES. I think we're near in the range of a top, like within the next 2 to 3 weeks, but I'm not going to be selling it until I see a move where we get a lower low and a lower high. And that'll be the clue. So to use the words of my friend Dale, the ice is cracking, but we're not quite there yet.
What do you make of the divergence between big tech and the S&Ps, and the S&Ps could make new highs here without NASDAQ?
There you go. NQs.
Yeah.
They were leading on the way up, and I think they're leading on the way down now.
Yeah. They look like they've peaked.
Again, I'd like to see a rally that gives us a lower high,
Yeah.
and then we got something to sell against, and that's what
Yeah.
I'm looking for in the NQs as well as the
All right,
ES.
NQs, make it convenient for Ben.
Yeah, give us a little lower high.
Yeah. Give us
Here-
a classic failing rally.
Let's look at the epic cycle plays. Gold, right?
Yeah.
If the current system is failing, gold is a safe haven. So gold is an epic cycle play.
Can we buy it at 18 again?
It's possible. Yeah. I mean, this for me is big time support right in here. So I think for me, I've been buying physical gold. So it's just like on weakness, you buy physical gold, you take delivery and you put it away and you wait
Where
for
do you put your physical gold, Ben?
Oh, I got a couple storage places.
Yeah. What's her address?
Anytown, USA.
Can we visit them when I come to see you? Okay.
So funny.
Go
Silver.
ahead.
Silver's a two-edged prong here. I think silver, you got the epic cycle play because silver's money, but you also got the green play, right? If we are moving to this clean energy, they got to have silver and a lot of it.
Could we see 20 again, Ben?
I think all those metals could, they could be a washout move because you're in this triangle bull crap, that we got to deal with.
Yeah.
So they could have a move down like that. But again, we've been seeing these, you had the low
Higher lows. Yeah.
Higher lows, man. That's what happens before takeoff.
Yeah.
So maybe we see it, but I wouldn't count on it.
Okay.
Bitcoin's the other one. I'm not a Bitcoin guy. I had some on this run up, sold it too early, of course. But I do think it fits with the epic cycle in terms of an alternate system controlled by individuals. So but I think the path is sort of down big and then we go.
Okay.
So I'm
Where's
looking.
That box? Where's that box coming?
The box is like 12 to 9,000.
What's the time frame? This year?
I don't really know in terms of timing on Bitcoin because I don't have a lot of data. It hasn't been around that long. So I was thinking, if we have a panic and people have to liquidate to create cash, maybe it's late next year, early 25 type time frame where we get that panic. But we'll see. I mean, you could follow the technicals. While they're crazy markets, Bitcoin is really harmonic and it really responds well to technicals. So just use your technical analysis and trade it.
Okay.
Energy. I think crude, you mentioned it, Dale, we had an important breakout. The turn is coming there. If crude is moving higher, tell me how we're going to get lower inflation prints, right? The base effects are going to work against you starting in about 6 months.
All right. Show the good stuff now. Get to agriculture.
Yep. We'll get to ags. Nat gas, one I've been talking about. I think that it's poised to move. We got a nice bottoming formation there.
Yeah.
There's Dale's brilliant idea. We talked about this probably a year ago. You said get a silo.
Yeah.
For the first time, you said it on one of our talks. I think you can buy wheat. I think you can buy corn. I think you can buy soybeans.
Yeah.
They've corrected. And again, just go back and look at history. These things move in waves, right? That big spike that we saw, on the Russian invasion and all that garbage last year, I think that was spike one.
Yeah.
There's more coming.
It looks like two because you have one to the left.
True. So maybe that's
it looks like there's one more left.
And I think we got one more big one.
Yeah.
One
that'll
more big
take
one.
that double top out.
Yep.
Yeah.
And that's the same way with a lot of commodities.
That's my Nostra Maldonado.
There we go. Here's one I've been pointing out to a lot of people, on my thread and in the weekly talks we give.
Yeah.
Cotton, man, this thing triangulates And when it's
Yeah.
done triangulating, it moves and it is starting to sneak up. If you look on this is a monthly, but if you look on the daily, you can see the higher lows. You can see the channel it's been stuck in. I mean, look at what happened the last time we did a triangle right here.
Yeah.
Boom. And I think that's coming. And I don't know, again, I don't know what's happening. I don't know why fundamentally, but cotton sure looks like it's ready to move. Copper. We talked about the triangles. This thing's in a triangle.
Yeah.
Not going down, not going up. It's frustrating everybody. But man, this is a nice consolidation on top of this, these previous highs that we made.
Yeah.
This thing looks ready. And again, the green stuff all means we got to use a crap ton of copper.
Okay.
The dollar. Blake and I were talking about at the beginning about the dollar. I think this was
you
a fall.
nailed it. So how come you just call Blake? I know Blake's here.
Because Blake put a post out and I just responded.
Oh, he tweeted at me. He tweeted at me and I saw the tweet and I was like, oh crap.
Because you tweeted something about the dollar and I said, hey, it's probably going to be a false break. And then I didn't say why. And then I said, oh man, I kind of should explain why. And then I said, well, there's this ABCD there. And I think that finished it. So let's see, right?
And you saved Blake like thousands of dollars.
That's awesome. That's awesome. He's a good guy. I'm glad I could save him some money. But look at this. If the dollar turns here, that's huge.
Yeah.
It affects
You're
everything.
Looking for like 140 or something.
It's possible, right? And that
I'd be happy with 108, 110.
Everybody has to remember this about currencies and the dollar. The problems of America are well known. We have massive, massive issues that I have no idea how we're going to solve them. But Forex is comparative, right? Where's the money going to go when the shit hits the fan? Pardon my French.
The new BRIC currency,
right?
China.
Yeah, it's good. You're going to go trust China, right?
Yeah.
You're going to trust India. You're going to trust Argentina.
Oh, especially.
Right.
Yeah.
No, the money's going to come to the dollar. So is this going to happen tomorrow? No. But is this going to happen over the next year or two? I think so.
That's a wrecking ball.
Yep.
So you're saying it only wrecks financial assets and not commodities. That commodities will fight the impulse of the deflationary forces of a strong dollar. They'll go up with a strong dollar.
Yeah, it's going to be like the 70s. We had the dollar, a strong dollar, and strong commodities.
That's going to have people confused.
It is going to be a paradigm that most people don't understand or haven't studied, but I think that's what's going to happen.
Do you have
I think you got a short
pair of dimes? Do you have a pair of dimes? Preferably pre-1965.
Exactly. Get the silver ones.
Yeah.
And I think you got to short bonds, man. I think rates are not coming down. And for the reasons we reviewed, I think the odds are, does that mean short-term rates aren't going to come down? Maybe. Yeah. Maybe you get recession fears and you see it. This is a monthly. I'm talking bigger time frames. Yeah. The regime has changed in terms of, lower rates, low inflation. It's going to be higher rates, high inflation now. And if you look at the last time it happened, it was 14 years. Does that mean it's going to be 14 years this time? No. But is it going to be longer than 3 or 4 years? Probably.
Nice review, Ben.
So that's kind of where I am. I don't know if there's anything else you want to talk about.
Ben's left it all on the table.
Yeah. I mean, shoot your arrows at me. I get it. And I'm okay with being wrong.
I can't because you took that retweet button away.
No, it's back. It's back.
You couldn't. Yeah. All right, good. All right. Ben, follow Ben. He does great videos with his partner. And Ben will keep you straight. So
we try and just kind of tell it like it is, and if you're wrong, remember in this business, it's okay to be wrong. It's not okay to stay wrong, right? When the market tells you you're wrong, you got to have a point where you say, okay, I'm wrong. Save some chips, pull them off the table, reassess, and then reattack.
You guys have any kind of business model?
No,
you
man.
Guys
no.
are just trading your own accounts still, both of
just
you guys.
Trading own accounts and just sharing the work. Kind of makes you accountable. right? You
Yeah,
can't,
okay,
when you put it out there, you're accountable. So our business
There you
model
go.
is accountability.
like it. All right, so there you go. No axe to grind with Ben. Make him part of your intelligence gathering. I don't follow this stuff enough. So Ben, wish you and your partner and all the people that follow you and that are learning from you and making people aware of this epic cycle that most people never would have heard of if you hadn't have, you know, gotten out there and spread the word. Thanks for being a watchman for everyone and here as well in F.A.C.E.
I always appreciate it, Dale. It's great coming on with you guys. You do terrific work, and same thing. You guys are spreading the information to people and helping them, and that's awesome.
Edify and build up traders every day.
Amen.
All right, buddy. So my trading warrior brother, Ben Maldonado, everybody.
Thanks, Dale. Take care.
All right, and I believe the morning edge has started right now, and I'll see everyone tomorrow.
See you soon.
Adios. All right,
Bye-bye.
thanks, Ben.
Bye.